Welcome to Captains of Industry. I'm Eleni Jaka. Sanofi has been in Africa for the last 40 years, spanning over 51 countries with a 9% market share. It also has 6 factories across Africa. Joining us now is the Global CEO for Sanofi, Christopher Viehbacher. Thank you so much, Chris, for joining us. It's great to have you on the program.
Well, thanks.
You are going to be focusing a lot on South Africa and on Africa operations. You're investing a further 20 million rand in your local factory in Mamelodi in South Africa. Tell us a little bit about your strategy when it comes to the African continent.
So we're already the number one company in Africa. We have roughly 1.5 billion euro in sales, over 4,000 employees. So Africa is an important market for us. This is very much symbolic of what we've been doing in emerging markets everywhere. We've got local production, we've got a range of products that really meets local needs. We've been therefore able to provide those at a price that meets those needs. So the factory here is very much aligned with that strategy. It's focused on TB medicines. Today we're announcing an arrangement with a company in India that provides us with a source of antiretrovirals. So it's all part of making sure that we have a range of affordable medicines that can help the company to grow.
Antiretrovirals, we know that a lot of South African companies are also focusing a lot on this, and we know that everyone wants a government tender. Tell us about your relationship with the South African government, and you spoke of the Indian company that you're going to be teaming up with, Hetero, if I'm not mistaken.
Hetero.
So tell us about how those synergies are going to play out, because every pharmaceutical CEO that I've been talking to, they keep talking about the relationship with government and antiretrovirals.
Well, antiretrovirals are important because roughly 50% of the population who need antiretrovirals are getting them today. So that's around 2 million people in Africa. And we're already seeing that there are shortages of medicine. And in particular, the South African government would like to be self-sufficient. So they have a goal of having at least 80% of patients treated with locally supplied and locally manufactured medicines. So right now there's only 2 companies that do that. This will allow Sanofi to really fill, I think, a hole that is out there. Supply is going to need to increase because the objective is to double the number of people on HIV medicines. They want to be locally produced and they've got to be affordable. And by sourcing the API from India, we'll be able to provide, I think, a very good range of affordable medicines.
And this is a volumes game at the end of the day for Sanofi as opposed to a margin game.
It is, and I think increasingly that's where our whole company is going. I mean, this is an industry that focused traditionally on a few wealthy countries. We perhaps provided medicines. We looked at 1 billion people in the world as our target audience. If you look at the US, Europe, and Japan, there are 7 billion people in the world. You're not going to really be successful unless you do slowly shift to a volume game.
Well, it's quite interesting because you've been in Africa for 40 years. Across 51 countries, and you also have factories in 6 countries across the continent. So you have had a very strong presence in Africa. Has it been a game changer for you recently in terms of focusing more so on Africa?
No, I think what's interesting is that Sanofi didn't leave a lot of markets that were seen as being less profitable. You know, in the go-go days of the 1990s, everybody was really focused on high margin, high growth businesses, closed factories in places like South Africa. Sanofi stayed over the years. And because we've been in a lot of countries like South Africa for decades, we've got very strong local management. We understand local culture and customs. We've been able to develop our product line for that. We understand government and what they're looking for and how we can best partner with government to help them achieve their public health goals. So I think this is a true competitive strength of Sanofi that really is difficult to match by other competitors. It's true in Africa, it's true in Asia, it's also true in Latin America.
How's it playing out when it comes to many of the African countries? We're seeing more and more democratic elections occurring, a lot more money being focused on health, and not so much only by the aid that is coming through into Africa, but also governments starting to spend quite extensively on health and on medicine.
I personally am extremely optimistic about Africa. I was in Côte d'Ivoire. Clearly a country that's come through an awful lot of turbulence but is now finding political stability. I'm very encouraged by the African leaders coming together in West Africa to really try to bring stability again to Mali. That stability is extremely important for economic growth. With economic growth becomes investment in healthcare. So for us, having the factories, having the presence having the portfolio gives us a huge opportunity to really reinforce our leadership position.
As you mentioned, 80 million euros spent in Africa over the last 5 years. Factories in 6 countries. So tell us about your expansion plans on the African continent.
Well, we have plans to spend another 120 million euro locally. I think one of the most important things, if you take malaria, for example, we have a medicine called ASAC, ASAQ. We decided to make that in Morocco. By making it in Morocco, we can provide that for $1 for a 3-day treatment for an adult, 50 cents for a child. We make all the tuberculosis medicines now for the world, except the United States, right here in South Africa. We can produce a treatment for 12 euro cents, 15 cents American, every day. That's less than the price of a cigarette for tuberculosis treatment. Obviously, we are also bringing in diabetes medicines, oncology therapies. It's important to have a full range of products. We're also in consumer health. Genzyme is here. Animal health is here. So for us, it's a pretty exciting opportunity. And emerging markets is really what has driven a lot of Sanofi's ability to offset the patent cliff. We sell more in emerging markets than we sell in either Europe or the US. No other pharma company can say that.
This is quite fascinating. That I know that a lot of foreign and multinational companies that do operate in South Africa say that labor costs are increasing quite dramatically, cost of sales also increasing. It seems that you're giving me a very different story here, that it actually is more cost effective to produce medicine, at least in Africa.
No, I think we've done a huge amount of work. I toured our factory last night. We have a lot of lean initiatives to really keep costs down. And I think the success of our product range has basically been able to show that we've been able to maintain a very competitive cost base and grow the business.
Let's move further into what we have been seeing coming through from Europe. You are going to be closing down one of the factories you've got in England. You are saying that this is a concern because while we're seeing this recession, the debt crisis playing out, there's less and less spending that is coming through on health. It seems that the debt crisis has affected even the pharmaceutical space.
Clearly, you're seeing an awful lot of austerity programs. Governments are the principal reimbursers of medicines and healthcare in Europe, and that is affecting our business. We've seen a number of price reductions. But really the main driver of our business is our patent expiries. And that's what we're really dealing with. We've been pretty much progressively disinvesting in commercial teams in the US as well as in Europe, and shifting that resource to emerging markets where there's growth. I think Europe will do better than the financial markets expect, but there's no question that economic growth is going to be extremely sluggish for a number of years to come, and I don't look at Europe as being a major driver of our growth.
Are you going to be closing down more factories in Europe? And you were talking about patent expiry, so I'm sure that is also going to play a significant role.
No, we have had to close some factories largely just because we have lost, in fact, volumes. And that's the case of our Foden facility. But largely because we've invested in things like consumer health and generics, we're able to maintain quite a good volume through the throughput in the plant. So I wouldn't expect any other major plant announcements.
What's quite interesting is that you mentioned that even through the tough times in South Africa, you managed to stick it through. Are you foreseeing just a very tough time to ensue in Europe, something that is going to be very much in the long term for you to take such a drastic decision in terms of job losses and shutting down a factory?
Yeah, it's been a question of rebalancing, but ultimately our objective is to provide health care to everybody in the world. So just as we stayed in Latin America through all the periods of hyperinflation, and that looks inspired today with the way, for instance, the Brazilian economy is going, I think Europe does recover in the next 3 to 4 years, and to a degree you do have to have patience because ultimately the fundamentals of healthcare are there. Aging population, new technologies coming along, increasing desire for better healthcare. So I think the fundamentals of healthcare are there. Just in 1 year or another year you may have a problem in one country, another year, but I think the fact that we've been patient over the years has really paid off.
Well, just speaking of patience, and when it comes to the acquisition of Genzyme, I know that there were a lot of volatile conversations that occurred. At least this was what the media was talking of. And eventually a sweetener was put on the table, $74 a share, amounting to around $20.1 billion in the investment in Genzyme. Tell us about the lead up to the final moment where you were able to acquire the company.
Well, I think we were patient, we were disciplined. We did give a bump at the end. I think we moved from $69 to $74. That's the lowest bump ever done in a hostile acquisition. And I think that's why the financials are looking so good this year. This is a biotech acquisition that is accretive in year one and is delivering a return on investment in excess of WACC. That is pretty rare in this industry. But what was really interesting about Genzyme is it really exposed us again to biotechnology, gave us a fabulous scientific platform in Cambridge, Massachusetts. It's given us some new assets in the pipeline, particularly in multiple sclerosis, and in fact just this morning we also announced the filing in the US of a new drug against families with genetically high cholesterol levels, for example. So I think it's really helped reinforce the growth story of Sanofi going forward.
Did you ever pay out the contingent value rights?
Not yet.
During the time?
There are a total of $14 associated with the contingent value right. $1 was associated with production volumes in 2011, which were not achieved, so which we didn't pay out. The other $13 are related to the launch of the new multiple sclerosis medicine, Lemtrada. That will likely launch from next year, and we'll see what needs to be paid out then.
So industry players were also saying that the advent of the CVR is said to now be something that is going to be ingrained in any pharmaceutical takeover down the line. Do you agree with that? Because it gives you time to see if the drug is going to be approved and whether it can become commercially viable.
You're taking a big risk every time you bet on a drug in development. You never know what's going to come through, and this is a way of protecting our shareholders in case it doesn't work, but it also rewards the shareholders of a selling company in case it does pay off. So I think it's a very helpful tool.
Give us an indication of some of the challenges that you experienced as a leader, and you were talking about a hostile takeover, and we know with the former chairman of Genzyme there were a lot of altercations, some would think, that occurred. Was it a tough time for you, and how did you manage that period?
Actually, the bankers will all say this is the most polite hostile deal they've ever seen. I think when you're CEO, you've got to do the best for your own shareholders. Henry did the best for his, I did the best for mine. At the end of the day, the deal got done because we were able to find, particularly through the CVR, a way of bridging the valuation gap. I think what was extremely helpful is that constructive dialogue, even though we had a difference of view on valuation, that paid off in integration. You're talking about a trans-border transaction, marrying a French company with an American company, a biotech company with a big pharma. This was not going to be an easy integration, and having Henry's support going into integration, because we hadn't actually had those altercations throughout the hostile process, was very helpful, because if you want to realize the value from any acquisition, it's always after you sign the deal.
And it's quite interesting because during that time, a lot of the media and investors out there were saying, well, it's not very often that you see a French-led company or even a European company bidding for a US company. So there were a lot of interesting things and changes that were occurring during that time.
Yeah, and that's why I stepped in as CEO myself for 6 months, because on the one hand, I went charging for it before the transaction. At the end, after the transaction, I felt a need to make sure I was protecting it to a degree, because it was a big company with 10,000 employees, but relatively small compared to Sanofi with over 100,000. And I didn't want it to become submerged by the masses. I wanted to protect what was really great about Genzyme. It's patient focus, it's research and development. So we had to do that integration sensitively, and that's why I became personally involved in it.